Hi there, welcome to this week's weekly forecast. It's Monday the 11th of October. Okay, so last week, busy week, big week for the US dollar. Certainly, we had the non-farm payroll. Now, for those of you that don't know, non-farm payroll basically is the job numbers. The job numbers that come out once a month, normally the first Friday of every month. Last time it was in fact the second Friday, but there you go. So yeah, it's a big number last week because obviously everyone's talking about what the Fed will do in terms of their bond buying. Are they going to start easing back, commonly known as tapering? And this number was basically widely looked at. Fed Powell himself said that this number is really important, that if it was a decent number, then he doesn't see any reason why they wouldn't begin tapering at the next meeting. And indeed, the number was reasonably decent, came in about 194,000, although a lot lower than what the market was expecting. Still a decent number, but also the revisions from the previous month came in stronger than expected as well. So all in all, quite a good job number out of the US. And since then, the US bond yields have been rising, now up at around 1.6 at the time of recording. Bond yields basically indication of where interest rates are going to go. And with bond yields pushing up, you're seeing the US dollar push up as well. In fact, at the time of recording, I'm just seeing now that the dollar against the Japanese yen, we're hitting 3-year highs as we speak. So the dollar is going well bid at the moment. The other side of that is seeing a weaker euro. So the weaker euro basically as a result of the stronger dollar. Now we're also seeing some strength this week in the commodity currencies. That's the Australian dollar, the Canadian dollar, New Zealand not doing too much. Now the Canadian dollar is basically driving higher on anticipation of rate rises out there as well. They've already began their tapering, as you may or well not know. And also oil prices are still pushing up, pulling back a little bit, but still very strong oil prices, and that always does support the Canadian dollar. And the Australian dollar is pushing up as well, as maybe Australia starts to come out of lockdown. Commodity prices are strong, which helps the Australian dollar as well. So the commodity prices are strong, the commodity currencies are strong. On the other side of that, we've got the low yielding currencies. Now currencies like the Japanese yen, negative interest rates there, negative interest rates in Switzerland and in the Eurozone as well. Those currencies are being sold this week. So there's a clear case in the currency markets at least of risk on. Commodity currencies getting stronger, low yielding currencies getting weaker. That is not filtering through into the stock market just yet. It is closed in the US today. Maybe we'll see some follow through later on in the week. But the currency markets are certainly positioning themselves for a risk on week. That basically means maybe the stocks want to push higher. Okay, so now let's have a look at our Forex forecast. Now you can access this report by going to the forexsignals.com website. Just scroll down to the bottom. Okay, and you'll see it there. It says the Forex forecast along with all our other free tools as well. You've got the heat maps and profit calculators and so forth. But click on Forex forecast, and up will come our forecast for this week. Now, if you want to get this sent to your email directly, you can do so by filling in the details there on the box. So just a quick scan through of what we're looking at. I'm looking at the euro against the Oz. Bears still in control, still looking to drive lower. I've mentioned already how the euro is under pressure with a strong US dollar. Most actively traded currency pair. Normally they work in opposites. Strong dollar, weak euro. That's happening at the moment. Euro is weak, and we're seeing some strength continuing into the Australian dollar. And we've got levels down here at 156.50 that we'll be looking at. Nice channel to the downside at the moment, all looking very sweet, as I say, to the downside. Okay, also Max is looking at the US 500. Okay, so he's looking at a continued weakness for the S&P. He's actually looking at a bit of a channel coming in here at the moment, and he's being maybe tilting to the downside. But again, you can access this report if you go over to the Forex Signals site there. Also, he's looking at natural gas continuing to push higher this week as well for the reasons that he mentions there. And I've done a bit of a synopsis of the week ahead, pretty much what I'm talking about at the moment, about the risk on factor and how the euro could come under pressure, maybe having a push down to the 114 print, which isn't too far from here now, about 50 or 60 pips from where we're talking. 114.75 is the next level of support, possibly, if that's breached, all the way down to 113.50. All right, let's jump onto the charts now and look at the economic calendar for the week ahead and a look at a couple of charts. Come on. Okay, so I want to start off by looking here at the US 10-year government bond yield. This is the daily chart. You will recall maybe 3 weeks ago now I spoke about this important level here at this ascending wedge around the 138 to the 140 level. That if bonds were to break here, then we could see a push up to 175 in time. I didn't think it would get up here so quick, but it's certainly motoring ahead as we speak. Now, as I said, the non-farm payroll last week gave good cause or good reason to believe that the Fed are going to ease back on their bond buying. If they're not buying bonds, that basically means they're not supporting bonds. Bonds then have a tendency to drop in price. And if bond prices drop, then the yields go higher. And that's exactly what is happening at the moment. So at the time of this, we've got bond yields at 1.61. You can see here the next logical target is the next quarter round number, if you like, at 1.75. Bond markets tend to move in 0.25% moves at a time. So that's why the 175 level that we basically saw back in the beginning of the year around the March time looks like it's going to be tested. And if you look at that in relation to the DXY, this is the DXY, this is the dollar index. It's the main index that we look at when we're looking for value of the dollar. It's the dollar pitched against 6 other currencies. You can see the dollar on the same daily chart has been pushing up as well, basically following up those bond yields. So we're now coming up to 94.50, only 25 pips or so here from now, and that's where I expect to see maybe the dollar come to a little bit of resistance before it does push up. And I think you do need to see bond yields basically making a good serious effort at 170, 175 for the dollar to break through this 94.50 level on the index. Have a quick look here at the dollar against the Japanese yen, because it is at, as I speak, 3-year highs. So I'm now having to go out to the weekly chart here to see the last time we were back up here. It was basically back in December 2018. And I would expect this to just have a real serious test at this level again. 113.75, which is about 80 pips from here now, is going to be the next level of resistance. I still like buying the dollar against the Japanese yen. It's got the yield play advantage. Buy it on pullbacks, I think, is the name of the game. You don't want to buy at tops of candles or sell at bottom of candles. Wait for that pullback. It's one of the strategies that I teach. But in terms of interest rates, you've got interest rates rising higher in the US, and you've got interest rates basically negative in Japan, and looks like they're staying negative for the foreseeable future. So just the differential in interest rates gives a good reason for this currency pair to edge on higher. Now let's take a quick look at the euro against the US dollar. It's the most actively traded currency pair on the planet. Usually when the US dollar gets strong, the euro gets weak. Because it's the other side. It accounts for about 35% of all foreign exchange transactions. And of course, vice versa applies as well. When the dollar gets weak, the euro tends to get strong. It doesn't always happen forever. Sometimes there is a sort of a joining of forces and they move in tandem, but not for very long. But at the moment, certainly the euro is buckling under the pressure of the US dollar. You see here on my faithful momentum meter, the euro, that's the blue line here, it's down there. It is one of the weakest currencies. Of course, the Japanese yen is the weakest currency out there at the moment, as that is the negative interest rate currency. But the euro is under pressure and the dollar is looking reasonably strong up there. Of course, these commodity currencies, the CAD and the Aussie, are winning the show at the moment. Obviously, trend followers, you want to be buying the strong currencies and you want to be selling the weak currencies, and that's the name of the game this week. So look here at the euro against the US dollar. We've broken through structural support on the weekly chart. The weekly chart, big levels broken here, basically down at the 116 sort of 25 zone. We are now trading below the 200 exponential moving average. I haven't got it on this chart, but you'll see it on your own charts if you want to play it. We've broken through there. This level above us now, 40-50 pips above, will now act as resistance. Often old support acts as resistance, old resistance acts as support. It's basically when buyers become sellers and sellers become buyers. Just human behavior. So this level now that we've breached to the downside is looking like it's going to act as resistance if we are wrong. But the next bias, the next weighted bias, I would say would be down to certainly the 14 handle, which would see us coming into around here. 114.90 of course is the high of this level spike that we saw back in March. But if we do breach that, then I think we'll be coming back down to this zone here. This is what I call like the base camp, the 113 level, where this sort of ascent started from all the way back at the beginning of the year. Okay, so now let's have a quick look at the economic calendar for the week ahead. Head over to the forexsignals.com website, scroll down to the bottom where you see all our free tools and so forth. There it is, Forex Economic Calendar. Click on that, free to everyone that wants to avail it. As you know, look to the right. Anything in green is low impact news. Yellow is medium. Anything in red is to be considered high impact news. Scrolling out for the next 7 days. Not a lot out this week, and that's often the case after a non-farm payroll week, that the week is quite quiet. We do have some inflation data out of the US in the midweek. That's the consumer price index. It's basically telling us how much consumer is having to pay for its goods and services. And remember, the Fed are always looking at inflation to gauge where the interest rates should go, as do all central bankers. So that's basically midweek as well. And we've got the FOMC minutes as well midweek. That's basically telling us what they discussed in their previous meeting, giving us clues maybe of what they'll be looking at for the next meeting. We've also got some employment data out of Australia on the 14th. So that's very going to be keenly watched by those of you and us that are trading the Australian dollar. And later on in the week, we have got some retail sales data out of the US. Again, very important you keep an eye on these releases. I mean, you might not even be trading it, but just to make sure you don't get caught out by a release just as you place your trade and then suddenly a big announcement comes. So just always have a quick glance at the economic calendar. Make sure you're not buying or selling into a big news release. Okay, so quite a quiet week we have in store, but I am looking at the currency markets for a potential guide on where the risk money is going. At the moment, you're seeing the strength of those commodity currencies, you're seeing weakness of those low yielders. That could lead, in fact, to a push higher in the global stock markets. Let's see. Okay, so hope you found that useful. Don't forget you can access this report by going to the forexsignals.com, just adding in your email there, and then you'll be sent this report the moment it has been released, or you can access it, of course, on the website. Don't forget, we are streaming live around the clock, up to 6 times a day now, 5 days a week. If you want to take part in that, you can do so. Just head over to the forexsignals.com website, take out a 7-day free trial. If you don't want to stay, you don't have to pay, but check it out, see what it's all about, look at some of our tools, look at some of our strategies, and see if it's what you are looking for. If that's not your thing, that is not a problem. I'll see you next week. Have a good week.